Yes, man. What is going on? Always remember, whatever you think about comes about, man. Whatever you focus on grows. Whoo, look at this. This is a chart. Hey, my name's Gerald Peters. And I had taken a break from doing Sunday services. Let me make Peters. Sounds like we can hear just fine. Shit sounds like it's on extra crank. I promised to get this mic right. I got a new mic, and now it sounds like the volume's too high. This is the Dow Jones Industrial Average. The money flow as applied to stocks is a way of seeing stocks. And it's a way of seeing the entire stock market. And since this will probably be my last one this year, what is the date? The 17th. I got a busy week next week. Then we got Christmas. I used to go live on Christmas. And then we got the new year. Now we've blown into this from November to now. I mean, look at this move. And I mean, it's amazing. And one thing you should take away from this is that markets can go higher than you can imagine. And the worst feeling in the world is to be the guy doubting it and not in it, and it's going up and people are making money, and all you had to do was just be in flow. That's the worst, man. And I think I learned more about the money flow by doing that, like messing up, making mistakes. And I talked with a guy, well, several over the last few weeks who were either on the wrong side of this or somehow did something this year and did not make money. And yet the money flow at its core teaches that 70% of the time stocks are going up. And when I really got into this, and let's say I was coming into the market now and you would come across me, hold on just a second. Let me pull this up. Now I'm going to talk to you like you understand stocks, and I'm going to talk to some of you like you're brand new. If I was brand new, I get this all the time. If I had $10,000, what would I do? That's a very common thing. And it's different for different people. Like not a licensed financial advisor. I just tell people what I would do. And one of the first ways that I came to understand the stock market, and I continued to use it because it just works. And one thing I've learned in life, if you find some shit that works, just ride it till it stops working. Like, don't try to fix it. Don't try to just some things, just let them work. You know, you can find a house, find a property, it rents, it's just renting, it's going up in value. And then somehow you go, hey, I should tinker with that. It's like, no, maybe you should just keep that and keep making money and go tinker with something else. And if you look at this is the Dow Jones. Look at this on a weekly chart. If we back this up, the price is 372. Now this is the diamonds. This is an ETF. You got to pay a percentage. Hey, if you were smart, you go over to M1 Finance, you can do a 30 stock pie. You can create the Dow yourself and pay no percent. Boom. Imagine you got $1 million in the Dow. Why would you pay 1%? That's like, what would that be? That'd be like 10 fucking grand a year. You can't go over for 10 grand. You couldn't go over to M1 Finance, open a pie. I'm sure there's plenty of people doing that. But most of us aren't thinking about having $1 million. Well, this could be that year. Like, this was a year that you could have built a chunk. Like, there's people right now who got a chunk of money, man. At the beginning of this year, they had 100K. Now they got 250K in the stock market. What if you double that and double that? I mean, why can't you? What if 100 you get 30? I mean, pretty soon you're sitting on a lot of money. And as you watch the markets and you watch the cycles and you understand the money flow, like you can buy income. You can take money, put it into shit and watch money double, triple, quadruple, and it pays you money. And you can also shrink in time and you can capture little bits and pieces of fractal time, because the money flow you're going to see on charts moves fractally. It's time continuity. It's laid over in charts. Like we were just looking at a daily. And if you look on this, price is here. And then if you look to the left, price is down here and it moves around. Okay. Now we go to a weekly where each one of these bars is 1 week. What do you see? Price is up here, way over to the left, price is down here. And then you see a whole lot of moving around, right? You see that? Each one of these bars is 1 week. And each one of these bars is 1 week. Ooh. What's up, Jess? In the opening of the money flow, it says a fractal is a never-ending pattern. Fractals are infinitely complex patterns that are self-similar across different scales. That's what I just showed you here. That was fancy talk, man. If I'd have went to college, I would have wrote some shit like that. So I stole it somewhere. A fractal is a never-ending pattern. Fractals are infinitely complex patterns that are self-similar across different scales. Now, here's what makes fractal patterns easy. That's what weather is, man. Weather is just patterns, like it's math. Oceans, a lot of shit in nature. And I'm not, I'm talking over my head, and you can go look, and I just listen to smart people, and I'm go, okay, that guy sounds like he knows what he's talking about. And that's part of life, man. Like you don't have to have some sort of pedigree, or you went to finance school, or you have some sort of MBA. You don't have to do that anymore in the market. Back in the day, you had to have some sort of skill. Today, you don't. $200 will buy you an MBA. And you're like, what do you mean? Meaning it'll buy you MBA research at a company called Morningstar, and you just put in a fucking ticker, and 1102, scratch that, dude. You can put in the ticker and boom, you can pull it up. There you go. And a guy got an MBA from Wharton will tell you what he thinks of the company, and you're like, cool, thanks, bro. Now I know that. And if I know charts and I know cycles and I understand psychology and I understand interest rates, and I begin to lay that over the real world right in front of me, and then I lay that on a chart. And I was writing this today is I'm going to show you something. I'm going to tie this in that if I had $10,000 right now, if I had $100,000, if I had $1 million, this is what I would be doing. I would look at the Dow, and you say, why the Dow? Because it goes up. Even if you get it wrong and it goes down, it's going to go back up. I'm going to show you. So we're on a weekly. Even if you were, look, if you were I'm not going to curse in church. And I want to apologize right now for all the cursing I did last year. And I'm going to ask for forgiveness. And look at this. Guys, I have people that don't like me on the internet. Isn't that a weird thing? Can't see comments. Price. Now look at this here. I want to show you this. You see these boxes. Stage 3. What's down here? Pivot point, right? Anchor point, excuse me. See it? What's the opposite of this? Is up here, right? So this is a weekly chart. So this is like a way out. When I first got into trading, there were actually dudes who traded on a weekly chart. No bullshit. They would get paper, and they would see the price on Monday, and they'd write it. And when it closed on Friday, they'd write it, and they'd hand draw that shit in on a chart. There were dudes trading like this in rooms and all over the country, either individually or at what they call bucket shops. Bucket shops like having a margin account, right? That's part of the history of this game we're playing here. I mean, look at this. This is the Dow. Now, this is the book I'm forever writing. Promise it'll be out soon. From chaos to cash. The mechanics, timing, the market to accumulate wealth. AKA bread and butter system. We just put one of these trades on with Exxon this week. Hold on, I'm fucking with tech. Here soon, I'm going to build this out, and I'm not going to be the one fucking with tech. Someone else is going to fuck with the tech. And I'm going to trade and talk. Basic philosophy of the money flow system. This is from the book Chaos to Cash. Some of you may have it. I may have let some of you see it. And I'm not going to give free copies to my friends, by the way. Whenever you write books, people will try to get them from you free. Tell them, fuck off. Oh, scratch that, bro. 1106. The basic philosophy of the money flow. The money flow and the 4 stages of price movement. The stock market goes up as much as 71% of the time. Sometimes I'll get texts from my friends and they think, man, Mark's got to stop going up. Maybe we should short it. I'm like, you're going to short it because it's going up? Wouldn't you rather own it because it's going up and then short it because it's going down? I don't know. Just thinking out loud. And sometimes that's because they're looking at indicators like the RSI. You got to understand, the RSI is a velocity indicator. It's not giving you buy and sell signals. It's giving you velocity signals. And you got to lay that over it. Fractals are a never-ending pattern. Fractals are infinitely complex patterns that are self-similar across different scales. They are created by repeating a simple process over and over again, an ongoing feedback loop. Our ongoing feedback loop is this here, these price points. One thing we can control is looking at the time frame. So on a weekly chart here, look where it was. Oh, here, it's way down here, and it's way up here. Okay, let's go to a monthly. Let me know when this is a bad time to own this thing. I mean, if you're just looking at charts, looks like it's in stage 2 breakout. Now just look at this. Do you think it spent most of its time in a stage 2 breakout or most of its time in a stage 4 decline? If you understand chart reading. Okay, so once you see this, you realize this is a rigged game, dude. Like, okay, wait, this looks rigged. It goes up all the time. Yeah, there's moments of just, oh my God. And some of those can be big. The COVID one, no bullshit, was big for me. I'm gonna be honest. That I can say that. Don't scratch that. That was big. It doesn't look big now when we look back. That was big for me. Okay, that was scary. Even though I was on YouTube yelling at people, don't take government money, take your butt to work, make money, invest it in the stock market. Go look. And I told everyone, if you're not buying stocks, you're dumb. And yet I was still scared. But what this set up for me, look at this big down move. Throughout all of history, the market has come back. It's rigged, dude. It goes up. We can take this back right here. Let's take it back to 1949. Like, pick a year, man. There are periods where it goes down, but look. So wouldn't the ultimate strategy be to always own, have a way of building positions, collect lots of dividends? And what if I could hedge? What if I could short, right? What if I could buy shit that's going up when stocks are going down? That worked pretty well until recently. And that's worth talking about too. Throughout all of finance, there's these basic concepts like buy ETFs, buy S&P 500, buy Vanguard, buy VOO, buy VTI. I mean, people have whole channels on that. And it's like, how fucking much can you talk about owning an ETF? Like, goddamn, it's like a 2-paragraph thing. But they have whole channels on it. The ETF is Fractal. The S&P 500 is made up of 500 companies. Watch this. Let me see if all right, listen to this. Dow Jones has changed 54 times since its conception in 1896. What Dow Jones stocks were. American tobacco, sugar, cotton, oil, gas, electric. 1928, Dow Jones was expanded to 30 companies. What you're going to see, and people sometimes who criticize ETFs is, well, yeah, the ETF goes up because they're constantly taking out the losers and putting in winners. It's like, yeah, that's what investors try to do. I mean, in all investors, if you go look like Warren Buffett has stock. Berkshire Hathaway, the name of his actual firm, was a stock that went to zero. It was a textile stock they bought and they kept the name, and the company went broke. I've had 5 or 6 stocks go to zero that at a certain point, it's like I should have cut them, but that's not trading. That was shit that I own. I thought it would do well and it didn't. That there's lots of investments that is the way almost all venture capital. If you were to invest with your brother-in-law or your friend, it's probably going to zero. What's not going to zero is a closed-end fund like USA. It pays a 10% dividend. Watch this. We'll come back to this. Let me pull this up. We'll pull it up another window. Watch this. I say, when I first moved to New Orleans, I met a guy. He goes, "Oh, I saw you on the internet." And I said, "Well, dude, I'm not a financial advisor. So if I had your money, I put that mofo in the USA." This is back in December. Let me pull this back. Because he's not a trader, man. He's just a guy. This is back over here. Shit, no, I think it went even further back. Let me see. Yeah, no, I think it was in 23. Anyway, I was telling him I put it in there, man. It's like, thing pays a 10% dividend yield. And I was like, man, I could even show you on a daily chart, like when's a good time to trim it. I mean, I said, it's not perfect, but like you need money, you could trim into things. And if you're looking to increase your shit and you've made some money, I can show you how to, not how, but I can show you on charts how, when is, most likely a good time, just trying to give yourself an edge. Like you don't want to buy if all the indicators are screaming that, hey, this thing's overbought, or the velocity, it's run up too fast too soon. And we're likely to get a better opportunity. And, what signal, and this is, let me clear it. This is what signals the trend has changed, not this. You see that slight difference? For my trader friends, I get lots of guys that want to start shorting and hedging the moment the RSI goes extreme. Watch this. This is not what triggers a short. Look, it hit it there, and look, it hit it there. That's not what gave you a short. What tells you might want to be on the short side is when shit goes short. Just saying, and because otherwise you're going to be the guy in here. You can't even catch this run because you're trying to get this. And you're playing a game where the market goes up most of the time. So your edge is in the fact that markets go up, not that markets go down. And so it's a rare person that can make money on the short side. And if you want to take this fractal, I get guys that want to trade. Oh, I want to be a trader. Cool. Let's trade on a 1-minute chart. Sit down, grab your pad. Let's go. Can you guys do that? You're like, oh, it's so fast, Gerald. I wasn't going to do that this Sunday. It's a new me, man. It's a new me. I'll be nice, Gerald. But trading is the same thing. And watch this. I just randomly grabbed the last TQQ chart. And I don't know if you've ever traded it with me, but you'll see the money flow fractal pattern in there, right? Well, as I'm watching this, now think about this. We looked at a daily chart of the Dow. We went to a weekly. We're going to go to a monthly. We're going to go all the way back to 1850. They've been money flowing since 1850, man. Think about what your parents were doing. And man, think about that. You're like, hey, Dad, when those savings and loans, man, when they went down, why didn't you go buy a DPST, bro? He'll go, no. People don't know these things, guys. The things I try to show people. I'm not saying a lot of people don't know. There's people all over the world that know. But I'm saying my friends don't know. Average people People in trailer parks are not watching movement of stocks and buying leverage funds trying to capture that movement. If they are, they don't stay there long. And so we want to teach that. We want to teach how to that's how you get out of the matrix, is watching the matrix and capitalizing on the matrix. And so we made money on banks, right? FXI. Financial sector. You guys remember this, right? And we did it in the KRE. Regional banks got smashed. Such nice returns. And look at the pattern, man. I know I'm moving fast, but I just want you to see the pattern. You can see it, man. All right, so this is what I'm watching, is this. And what I'm looking for as well is where's price alignment. If you look at price here, it's on that side of the green line, right? And if you look at price here, it's on that side of the green line. And so as you enter a trade as a money flower, if I'm trying to capture, I got this new metal thing on my screen here. Man, this thing may end up breaking my damn computer. Now you might say, Gerald, you said if I had $10,000, $5,000, you're going to show me what to do. I am. I'm just trying to get past the first couple words in the book, man. Fractal nature. This is a fractal pattern. And here's the crazy thing. You can see it. This is money flow pattern, but when you get that time, look how as you get further and further out, it really just goes up. But as you bring in this closer and closer, it gets more chaotic and more chaotic. All the way down is like, can you imagine day trading? We weren't, as a group, we weren't day trading. I was actually trying to discourage people in the group from doing that. People would leave and I say, okay, you guys want to day trade? Let's day trade. I like day trading. And it's the same thing. It's the pattern all the way down. I started out as a day trader, matter of fact. And then I came and if you have time, it's a wonderful thing. When I was doing it, it was a lot slower. Today, it's a lot faster. And today, we didn't have smartphones and I had to be in a room. But I wanted to buy houses and it made it very difficult, man. And then so I started, I just adjusted to end of day swing trading most of the time. And I would day trade sometimes, but today it's so much easier and faster. And it's free. It's fucking crazy. We were paying like $7, $8 a trade, man. I'd be broke. You can go even now. Like you're not even paying anything other than margin fees. So look at this. If we have a fractal pattern like this is stage 2. If we take this down, guys, what direction do you think I'm day trading? Right? So if I'm observing price move and it's coming down and it's on this side of the green line, what I'm looking for is what? I'm looking for RSIs to go extreme. I'm laying these fractal, these things that track these numbers. They're fractal based on time, where we're at. And what I'm trying to do is I might be trying to trade time inside of time. So I'm looking at on a daily, price is moving up. I had a lot of friends wanting to play the short side because price moved up. You want to go short because it's up? Why don't we go short because it's down? Meaning as long as price wants to trend higher, let's go with it. Let's don't try to get ahead of it. And so that's kind of, and maybe that's semantics, maybe, but to me, it's not. Meaning, yes, when I see an RSI signal, I put this in the newsletter and I want you to think on it. That just tells me, hey, time to get paid, G. Like that. Hey, take your money. Meaning we're at the casino and we're playing, we're winning. Put some in your pocket, man. Keep winning. Let's go. Keep going. And then you can roll that stuff forward, man. That's called trading. And you can take that down, and you might do it on a weekly chart, and another guy might do it on a 1 minute chart. It's the same thing. It's measuring the same thing. But I would take that $10,000, young man, young lady, or that 100,000, or that 100 billion. God damn, I wish I had 100 billion. If I had 100 billion, you guys wouldn't know me. I wouldn't even be talking to you right now. That's not true. I would too. I'd be balling out, dude. I'd have, dude, panda bears eat 100 pounds a day of vegetation, 100 pounds a day. That's why nobody has a panda bear. Too fucking expensive. They have no predators and they don't fight nobody. They just eat and sit in the woods. That's it. Play and eat. The ultimate baller animal. Nobody can even own one. They're too expensive. It's too fucking expensive. They eat too much. Dogs of the Dow. When I was first getting going, I had 6 rental properties. I'm a young man. I'm figuring out, oh shit, if you spend all your money, you won't have any money. And I start thinking, okay, I'm doing this house thing. I'd read Rich Dad, Poor Dad. I started reading The Science of Getting Rich, and I believe that shit, man. I actually believe you can manifest. You can. The only problem with it is you. And me too, man. And I have a whole podcast on this, The Science of Getting Rich, and that's just mindset. And I've repetitively lived, and most of the things I talk about come out of that book. And a lot of it is anchored around this concept in Dogs of the Dow, and it's so simple. And yet people will not do it, and then do nothing, and then just watch this go up 20% a year, paying big fat dividends. And it's like, man, imagine when you were just sitting at 100 and you just would just put it in, shut the hell up, went to work, and it just starts dripping you money. And you let it compound, and you just put a bunch more in there, and next thing you know, you got 500 grand, and all you got to do is not mess it up, man. Like, you understand that, right? Like, once you get money, and money's making money, all you got to do is not mess it up, because your money is just going to keep making money. We're our worst enemy, man. I had a friend. They finally got over 100,000 in the market. I say friend, you got to get to know people in the MFG, and they're close, and we text and we talk, and if I go somewhere or I'm near a town, maybe I meet them and we talk about the money flow and you send pictures. You get to know people, man. And they just totally panicked during the sell-off, the growth crash. And I remember when everybody was calling for a recession, I'm like, I kind of feel like we had one, man. Growth stocks dropped 70%. I don't know what else you guys would call a recession. We had a goddamn crash. It was a fucking crash. 1123, cut that. There was a crash in growth stocks, and yet people are talking about there's going to be there already was. If you watch assets, I don't know if you saw how much Bitcoin fell. Like there was a crash, and then it bottomed, and it's like, well, goddamn, if we're going to have a crash from here, we're really going to have troubles, man. And then what happened? So then there was all this interest rate worry. What happened? Growth stocks went up because these things are ahead of people, man. It moves fast now, man. It's not waiting on anybody. It's not going to be because, I think in the year 20, you don't know nothing, man. It's going fast, guys. Go over and click on Barron's and click news, man. Guess what? Right now in Saudi, they're awake and they're doing shit and they're tweeting, and they have a bank system, and there's terrorists, and there's wars, and there's companies and embargoes and ships, and like all this stuff is going nonstop 24 hours a day all around the world, man. It doesn't give a shit about our politics or who our president it is. And these forces are at work, All you can do is you go, when you look at that chart and you go look, and if you go back all the way to 1850, every day when people woke up, it was a shit show. It's been a shit show your entire life, man. In your parents' life, every day they woke up, it's like, fuck, the Russians going to kill us. Video games are bad for you. Watch out. We're running out of oil. And people would wait in line. I remember waiting in line in the 80s with my dad. I'm like, well, fuck, man. Why we got to wait in line for gas? Oh, wait, there's plenty. We're fracking now. Just like that. And then 2008, man, people forget this. Apple, man. In 2008, look at this. Back over here, it's gone up so much that they redo the charts. Look, because it wasn't no fucking $1. That's how much it's gone up. In the great housing crisis crash, Apple Computer launched the iPhone and literally changed my life. In the mortgage crisis, the Great Recession, I owned 8 houses. I really didn't know to be scared. I didn't know what was going on. I was a dipshit, man. All 30-year-olds are. It's always about you, like we do as a species, man. That's why we don't have money, because we're selfish. Oh, I got to get my nails done. Oh, I got to go over here. We do all these things and not put, that's how we end up with not much money, is we spend it on everything else, man. Accumulation of wealth is easy. It's just time times amount times yield. Like, we can accumulate a lot of fucking wealth. All you got to do is think about it all the time. Just be fucking obsessed about it. And guess what? You're going to have a shit ton of money. And then here's the thing. Money makes money. That's the crazy thing, man. This is what people miss. Once you have enough stack, like, it doesn't matter if you do anything, money comes to you. Literally like $1,000, $2,000 a week, dividend, boom, boom, boom. Like, you can do that. That's real, man. And look at this. In 2008, why didn't your dad buy a bunch of Apple? Oh, we're in the Great Depression. They're not aware, man. They're not hunting. I hunt every day. Every day I'm hunting. And I had this guy who says, well, how do you can't beat the market. I actually had a kid say that to me. We're at a bar, and he was like smart. And I said that, I traded. I like trade private equity. It's my money. Like, we have millions of dollars invested, and we trade it and do things, and rent shit, and it's money with money. So I've done it as a side business all my life. I started with one house and one stock and everything. And then I got hooked on it, and I was like, fuck, everything is to build this. And then at a certain point, that's big enough, and you can decide, do I want to work and do this? I got a friend that works, has 42 rentals, and has a site. I mean, to me, that's crazy. And it's not in the stock market. I'm like, dude, why wouldn't you just be in the stock market? Like, it's fucking, you don't have to do anything. Like, you can own shit like the USA fund. Look, USA fund pays like almost 1% a month. Who gives a fuck what the price is? So look, this thing pays basically 1% a month. It's done nothing but go up your entire life. So, a guy's got $1 million in there. He's earning 6 figures every day doing nothing. What if he also works? Like, that could be easily, that could be 200,000 doing nothing. But people don't think in big enough sizes. And that's what the money flow is about. Like, these sizes are possible, but it's not a 401k, man. Nobody's doing that. There's nobody doing that. There's no 401ks buying 1,000 shares of Uber. I bought 2,000 something. Let me see. You're like, oh, so much money. No, it's not. Back it up. Look, let's go to a weekly. We were here in the 60s before when it IPO'd, right? So I've been playing this stock for how long? We've been playing it since it IPO'd. Now, my name's Gerald Peters, and I wrote a book called The Money Flow. And it's this idea that price moves in stages. Here's Uber. It's one of my biggest hits. I saw this because now I'm fucking older, wiser, and mature. And I've been doing the money flow long enough that I can see it better than I could when I was doing it for 2 years, 3 years. So the longer I do it, better I can see it, better I understand 12 sectors, like swing trading and various things. As you begin to do it, you can process it much faster. So as I look back over time, it's like, fuck, I should have owned 1130, scratch that. I should have owned Amazon. Why didn't I own Amazon? Why didn't I trade Amazon call options on every stage? Well, I mean, just go back and look. Pick a stock, dude, but watch this. So Dow Jones, this is 1930. Now keep thinking about what I'm saying. You see what's happening here? Uber just got added to the S&P 500. I knew that was going to happen. I also thought that I would have said that about Lyft. That did not happen. You know, I feel like I've been pretty transparent on Uber. The only reason being is I've just seen it over and over. I lived through Netflix and I played it wrong, you know. So I gotta own Roku. I gotta own Square. I gotta own SoFi. Like I just, even if it's some, it's like, fuck, man. You have to have exposure to these, and they're all right there. You know, Uber's, it's on everyone's phone. So part of the money flow is intuition. It's living in flow. It's thinking, fuck, I could get rich. You can. It offers you that. And if you can roll it forward a few times. Science of Getting Rich says, chapter 2, the ownership of money and property comes as a result of doing things in a certain way. And that those who do things in this certain way, whether on purpose or accidentally, can get rich. While those who do not do things in this certain way, no matter how hard they work, oh, the poor people, Gerald. I know. Oh, man. I wish they could learn the money flow, man. I really do. I tell you what, I told every homeless guy I meet, bro, give me 47 bucks. I'll email it to you. And I'm right here. Every time you see me out on the street, man, as long as you bought my book, I'll tell you about it. And I'll give you a couple of tickers that are going to make you money, man. That's all I can do for you. But you're going to have to give me 47 bucks, man. And I can show you how not to be homeless, man. Is that too much? It's true, man. Here's Uber. I believe 70% of the time stocks go up. That's the actual money flow. So if you go to the petersreport.com, I'll post all my trades here in delay. Every Sunday night, I update this. I hope to have it updated by 10 p.m. I'll put the date. Like right now, I'm working on it. And then I have a video. This video of the Dow Jones will be in there. I've been posting homework right here. I promise you, if you stay with me for a year, do these little homework. Some of them are just watching the video. This was a close one. I had another video I was going to do instead that was about real estate, and it was about all these commercial parks, whatever the hell they call them. And yeah, we have a lot of them in my area, and I don't want to say I'm no expert in real estate in these, but I see it and I think, man, they look empty. These little commercial buildings. I'm like, damn, there's some of these in New Orleans. I've been thinking about buying one for MFG headquarters, setting up a trading room in there, doing MFG capital, man. I'll get kids trading my money. Let's go. If they're watching, man, if they can handle it. A lot of whiteboards, a lot of videos, a lot of shit coming at you, man. This is that video. The point that I'm trying to say there, one, you play the game as fast as you want or as long as you want. And in the long run, it goes up. But because it moves, and that gives us an exploitable pattern. Pull this up. Like visuals, man. At MFG, at our new headquarters, I'm not going to do this. I'm going to have a guy who runs the board do it. I'm interviewing now, though. He's got to have at least one felony and had it served in at least one gang, or he can't even get the job. I don't want no sissy tech guy. Okay, I don't want no silicon guy. I want a guy right out of fucking penitentiary. That's what I want. You can't be on probation though, man. That would cause problems. He's got to run tech. He doesn't need to know stocks. He needs to know tech. I'll show him stocks as he watches me and runs the shit. So if you're in New Orleans and you're listening, that's your job offer. I'm going to buy the building. You got to run the tech, man. The money flow in the 4 stages of price movement. The stock market goes up as much as 71% of the time. The problem is it's not a straight line. Price can only do one of 3 things: move up, move down, move sideways. So if I had $10,000 and I was just getting going, I would get real close to Gerald Peters, and I'd go look at the Dogs of the Dow, this thing that he did. So when I was learning how to play guitar, I'd be looking at him, and that guy would go, oh, well, Jimmy Page is the one that inspired me. I'm like, well, fuck, man, let me go look at him. Why am I talking to you? When I was at, I don't know, I had 4, 5, 6 houses. I came across this book. And inside of this book was a story about a guy named Michael B. Higgins. In 1999, he put out a thing called Dogs of the Dow. Now, the story behind this is he had been running a hedge fund using this simple strategy, and no one knew that. They didn't know what he was doing, but he was always either in line with the stock market or beating it. And the dividend yields off of his fund were running it always like 2% higher than the index. So you would get index-like funds, but 2% more cash distribution. Well, if you're in retirement, that sounds cool. So he managed money. And the story goes, one day, the way he learned was as a young man, the money flow talked to him. He goes into a building and there's an old banker, and he's trying to pitch the old banker on their news, their service on how to pick stocks. And this old banker looks up and looks at him and goes, you think you know stocks? You don't look old enough to know stocks. And they have this exchange. And then he goes, son, you think all that shit you guys do works? You don't know where nothing's going. He goes, this is what you do. And he pulled out supposedly a true story, newspaper. And he goes, you see all these ones here? You find the best losers of the year, and basically told him the strategy. And that was it. And then he went out and worked on that, ended up turning that into a hedge fund. Proponents of the dog strategy argue that the blue chip companies that make up the Dow Jones. So look at this. Go home and be like, Dad, why didn't you buy any Dow Jones, dude? It looks like it only goes up. How can the stock market go from here to here and someone stay poor? I mean, you had more than a day, dude. That's like 30 years. Like, this is there for us, man, but they like kept it secret. You know that, right? It used to be hard. It's easy to pick on. Well, why didn't you? It was $60, dude. Back when your dad was a kid, for him, he would have to go down to a brokerage, put money on thing, call these dudes up, or if they even did that. And that's where drips came from, man. So you didn't have to keep doing that. That was why drips were so cool. There was no commission fees. It was $60 to buy a stock, $60 to sell it, man. And they didn't get to this discount shit till the 94, 5, 6 when E-Trade and them start coming out. So today, man, we got people just too damn lazy to click a button. All they got to do is go over to M1 Finance, open it up. They could go look, what are the lists of the Dow Jones? But here's watch this. Here's the dogs. This is this year's list. Walgreens, took an ass whooping. Verizon, 3M, Dow, IBM, Chevron. I do like some Chevron. Amgen, come on, man. I'm with Amgen. I've been with Amgen for a long time. Cisco, man, I got friends that work in corporate sales at Cisco. Actually got friends at Chevron, Amgen, 3M. I know, well, not really. Not at Walgreens. Coca-Cola in Atlanta. Yep. Johnson & Johnson. So we know these companies, right? What I would do is I would go to the current, I would go, okay, what is this? What is this idea? Here's what it is. Now follow me. This is chapter 10 of my free ebook. You don't have to die broke. It says, now one of the concepts you got to understand, yield and price go inverse. For you to understand this strategy, you have to understand this concept. I know most of you are like, yeah, I get it. No shit. Some people don't. If a stock is $100 and it pays a $5 a year dividend, you'd say that's 5%, right? $5 of 100 is what? 5%. Well, what if it falls to $80, but it pays a $5 dividend? Well, that's not 5%. So if I buy it at 80, what's my return? It's like 8%. We're both getting $5, right? You're actually down 20%. I just bought the stock. So we could own the same stock, getting the same money, but we got different amounts invested. That's all the money flow is, man. And so as I lay something up, I don't want to buy this. That's like buying this over here. I'm not saying that's the top. I'm saying that's the wrong side to be a buyer. That's if as a trader or no, if we begin to fractalize the time, if we take that shit down as a day trader, it's a whole lot of selling. Boom, boom, boom. We're buying, selling higher, buying, selling higher, buying, selling higher, buy all day long, buying, selling higher. And look at this. It went open here, it went all the way up all day. Cool. Buying, selling higher, buying, selling higher, buying, selling higher. That's all you're doing in there. Because that's the drift of the market. Buying, selling higher. If you say, well, why would anybody do that? It's well, watch. If we drop it down, if I go to 5 minutes, I don't know about you, but what's this look like over here, man? Look, that looks like a stage 4 decline. Look, price dropped underneath the 20, right? Let's pull up our pattern. So if I just met Gerald Peters, I would get my stock course, getting started with stock charts, just so it wasn't I can't say that. I'm not allowed to call people names for not buying my courses anymore. Apparently that makes me very unprofessional. There was an intervention. I had an intervention. Apparently I owe Dan's, I think I picked on one of my friend's family members. Is that true? Did I do that? I just thought I was busting balls, man. I didn't. Is that true? Did I do that? I apologize. I apologize, man. I didn't mean to do that in church. Science of Getting Rich says the ownership of money and property comes as a result of doing things in a certain way. Those who do things in this certain way, whether on purpose or accidentally, get rich, while those who don't do things in a certain way, no matter how hard or how able, remain poor. They're just talking about what it's saying there is basically you're going to find something that you can do over and over again that works. Duh. But I mean, that I'm just trying to simplify. You got to remember the book is in no way trying to offend your religion. if some of it sounds like mumbo jumbo to you, cool. It's just poetic language is what he's doing. He's just taking license, you know, and he's like quoting some things. And it's so applicable to today that it blows my mind. Like it's almost more today than it was when I was younger. Because I was more close. I'm trying to find, what is it? Chapter 6. Hold on. I'm getting off topic, but anyway, he talks about the railroads and farming being a good business to get into. And as I'm listening to that, I'm thinking like Bitcoin farming. Fuck, I should have done that. Scratch that. 1144. There's lots of things you can look back and say, I could have done that. I saw that come in. Social media. I got friends that are like, I don't like spending time on social, Gerald. I know, because you weren't smart enough to buy the stock. How about put half that effort into hating on it to investing in it? Yeah. I mean, if you see it, damn, like you got to be a genius to realize that that's why cigarette stocks work, alcoholic stocks, cars, people like shit. Why do you think credit cards destroy families too, man? But there's Visa, MasterCard, there's all kinds of SoFi, there's lending. Lending blows families out and people out all the time, you know, and then they blame the bank. Oh, the bank gave them a loan, man. So these things are there, man. You didn't have to use Uber every day to realize it's on every human being's phone. It's literally changing the world, changing transportation. Transportation is a basic fucking thing that built the Dow Jones Industrial Average. It was built upon trains. Transportation is at its core. There's a couple things in this world that are core industries. Sex, core. That shit ain't going away. It'll be maybe improved with AI, man. I don't know. Maybe your AI wife will like you better. I hope. I mean, okay. Sorry. Scratch that. 1146. I didn't say that. Your AI vacuum cleaners and yard mowers and all that stuff will make your life easier. I don't know. But we have to be observant of that. We can't be the guy who's like, get off my lawn. We're traders, man. So when Bitcoin comes out, I caught myself doing that then, man. I did. I caught myself. And the guy didn't know it, but I something he said made me realize I'm like, damn, I'm over. Yeah, you have to observe this. You know, you have to, whether you like it or not. And I remember my grandmother she's like, I don't need any meal, and you know, maybe she didn't. And Warren Buffett, he doesn't need Bitcoin. I get it. Charlie Munger didn't need it. He's rich. You don't need your dumb Bitcoin. You know, so to him, he's 90. He can think that. It doesn't matter. He's done hunting like that. But if you're 22, I mean, come on, man. Like, you got to be on these things, all these new things. You got to be on them. I'm not saying buy penny stocks, but be ahead of them. You know, you definitely don't have the luxury. Watch this. I own international paper. Oh, you can still just got to take it off. Not the Texas company. What you're going to see there as you watch this is a history class of America, man. Aircraft companies, steel companies, train companies, rubber tire companies, Bethlehem Steel, Chrysler Corporation, America Tobacco, Sears and Roebuck. This is a history of America, man. America. That's what it is. And you're living in it. You can be like, I don't like America. Don't care. Market's going to open up on Monday. It don't give a shit what you scratch that. It don't care what you like. So as I watch this, if I'm a day trader trading a fractal pattern, now hold on, we're going to stay with the dogs, man. I'm going to show you what to do with $10,000. I want you to see something though. I don't want you to think I'm crazy. Most people think I'm crazy, guys. I have no friends that do this. There's no one in my life who has a laptop or an iPad who sits around with me and just giggles as price and hey, did you see? Nope. Only people doing that with me are people in Discord on TQ channel. Sometimes at night I'll just watch the Bitcoin price move around because I think it's cool. I'll get in trouble. My wife, she'll wake up and I Roku'd it to my TV from my phone. I go to sleep to it. It's kind of romantic, I think. Soft light of Bitcoin descending into stage 4, stage 4s. It's like Luther Vandross to the stock trader, man. Candlelight lights. Am I going too far? Everybody says I'm going too far. I'm just okay. Maybe this is just in my head. Okay. Maybe it's just in my head. Bear rugs, like nobody. Okay. Watch. I'm sorry if I've ruined the. This is a 1 minute chart of Bitcoin. Right now, we're in stage 4 decline. I would not be short here, but if you're our short seller, this is where you got your move. I would be waiting. Here, hold on, I guys. Change the setup now. And so I'll talk for a second as we watch this play out. I would be waiting, and this was real time. And so as I have my $10,000, if there's a strategy that sorts and selects things for me, proponents of the dogs of the Dow strategy argue that blue chip companies that make up the Dow Jones average are better and able to withstand market and economic downturns and maintain their high dividend yield due to their access to factors such as their established business lines, brand, access to credit markets, ability to hire top level management, ability to acquire dynamic companies. Since a high yield often occurs after significant price decline. So remember my example. Walgreens was paying 5%. Stock drops by 20%. New investors come in, they're getting 7, 8%. Lower it goes, the more risky, the higher the yield. Same in real estate, baby. Oh, all my real estate friends are like, Jerry, I don't understand the stock market like you do. No shit. You don't study it every day like I do. Duh. That's it. Or trust it. Like, duh, of course you don't. You're not supposed to. It's called skill. And I also don't know how to do what you do. I can't fucking change engines. I don't, I don't do roofing. A lot of things I don't do that I know about, but I don't do them. And there's a lot of people that know a lot about investing. They don't do a lot of investing. They know a lot about trading. They don't do a lot of trading though. Like I do a lot of trading, fucking a lot. I did 174 trades last month. So add that on to years and years and years and years and years, man. People around me trading come and go, And sometimes people think I should get excited because they showed up to trade. And it's like, bro, you know how many people have come and gone in the 20 years that I'm still here trading and doing dividends and trimming stage 3s and buying? Like people around me come and go. Now there's a core that are still there, but it's like, it's going to take me a minute to get like overly excited that you're there. Because people will come and go on this. So, okay, look at this. If this is coming down, right? I got a zone right in here. Our RSI is in. But what are we waiting on? We need sideways action, and we need that to turn. I'll come back to this. This is showing you the money flow in real time. So if I'm watching a Dow stock that pays a high dividend that's in a stage 4 decline, last year, what was the alumni? The alumni was Walgreens. So the strategy goes like this. The stocks that make up this list are the 10 stocks in the Dow Jones that are paying the highest dividend yield. There are 30 stocks inside of the Dow Jones Industrial Average. Not all of them pay a dividend. Salesforce does not. Most of them do. The ones that are doing great have tiny little dividends. You're like, why would you do it? It's 1% because the 1140.53. The stock goes up. Go look at McDonald's. It's not that big a yield. It doesn't have to be. It makes people rich. I've owned shares of McDonald's. It's done nothing but go up. Every sell-off was just a buying opportunity, as is Walmart, BX, a whole bunch of others. And so the way we protect ourselves, we build out a diversified portfolio of quality assets, and I watch them. And then I look, and I pay this guy $200 to give me an MBA. And then I take their ticker symbols and I put them in there. And I put them on my notes. And I watch the 12 sectors of the economy. And I just give a shit. And I just put my attention on it. And I say, damn it, this book here says that if I do shit in a certain way, I can get rich. Math says I can get rich. These guys will give me money. And then if I start to follow them and track them and trade them and put my money in it, and I get real serious about it, let's see. Here's what I was buying. Dogecoin. Gerald, why are you buying Dogecoin? That's dumb. Well, it's going to follow Bitcoin because it has had a market cap in the billions for a long time now. So it doesn't matter what we think about it. It is $1 billion asset that happens to be a fond of another, the richest man in the world, seems to like it. I'm not that bright. I didn't go to Harvard or Yale. I didn't do any of that. I just use common sense. If the richest guy in the world kind of likes it and there's billions of dollars in it, let me in it. And I'm not putting all my money in it. I just want some. And as I watch it, I'm thinking about the money flow, man. I don't know where crypto's going. I know where Bitcoin's going. It's going up. You say, why? Well, I already decided this. Long before there was Bitcoin, I decided assets go up 70% of the time. That's it. I already know where Bitcoin's going up. So, look at this. Man, did that back in October, man. Boom. I think these are just getting going too. Now, the wind, we talk a lot about that. The wind. So what would be the wind of the dogs of the Dow? The DIA, right? That's what we've been looking at. This here, the Dow Jones Industrial Average. Now, stocks come in, stocks go out. In this strategy, you're only going to have the stock for a year. If for some reason the stock went out, they don't go to zero. They just take them off the list. AT&T was taken off this list. Let's look at AT&T. That's what, $16 or something. Didn't go out of business, still paying a dividend. We bought a bunch underneath the 200-day. That is right out of my book that I don't have out yet. Did I get rid of the book? Did I? Maybe I didn't. Now we throw that chart up. You should have already been in it. I've been in Uber. Of course it's going in there. Standard Oil, let me in, baby. Exxon, let me in. 1976, I'm in. Wait, Gerald, is this a good time to buy? Is now a good time to buy stocks? 1976 was the good old times. Let's see. Was it the good old times? I was 6 years old. I don't have any idea. Headlines of 1976. Oh, Jesus. Jimmy Carter was president, man. Let's see. What was up in there, man? Come on. What was going on? Give it to me. 1976. This ain't nothing, man. Why are they going to give me that, man? That's dumb. Major events included Jimmy Carter defeating incumbent President Gerald Ford. Out with it, Gerald. In presidential election that year, an incorporation of Apple Computer. Oh, man, we should have went penny. If your daddy would have been in the penny stocks, Apple Computer and Microsoft and the New Jersey Supreme Court ruling, Carrie Ann Quillen could be disconnected from her ventilator. Oh, man, we were fighting the whole Dr. Kevorkian shit. What was going on, man? What was the price of oil? 1976 ushered in America's bicentennial. Man, it was our 200th birthday. Damn. Anniversary declaration provided much needed respite from the bleak years of the Vietnam War, Watergate scandal, and turbulent culture. Oh, man, it was a shit show. Just like now, man. Nobody liked the president. There was fighting. I don't know, Gerald. All right. So right now on Bitcoin, if we're tracking, we have a possible anchor point. All right. The same way I look at it on any time frame. I just want to show you, I want to remind you the fractal nature of what we're doing. Beautiful ladies walking through the temple. Sorry. Once had someone tell me that it was horrific and it sounded like death music, and I was an awful person. That was a little much, I thought. It's old school, man. It ain't. It's like, damn. So we're watching this develop. So if I'm watching these stocks, now current doggishness, it's changed. Cisco, Chevron, JP Morgan. Looks like Coke came off. So look at Pfizer. Now, look at this, though. This thing is just in a straight downtrend. You know, they raised the dividend and offer to support it. So maybe that's a case for it. And so as I watch this thing come down, man, I'm doing this. Where's the, I'm watching and I'm watching. I'm trying to use that fractal nature of time. So I would go and I'd go to the dog list. I'm going to take a position in each of these. I'm not going to worry about where it's at. You get on the bus when you get on the bus. I mean, any day of any week is not a good time. I had people texting me wanting to short the damn NASDAQ a week and a half ago. Well, it's got to go down. Look at the RSI right here. They were wanting to short it over here, take hedges. Now look, we're headed up. We might keep going up, man. Keep going up, man. I've seen people do that on the triple levers, blow out all their profits for the year because they doubled down on it. Like up in here, rather than taking the loss, they bought more. And then it rips again. And now all of a sudden they got an actual problem because they're negative 10,000 on a trade, man, or 15,000. They've never had a loss that big because they kept doubling down on that thesis that this has got to turn around. I mean, this keep going longer than you can stay solvent, especially if you're on margin. Seen that happen. It's crazy. That game's much easier played with, say, a stock like Exxon on this side than trying to short on that side because it'll keep going. It's always going to keep going. That's the natural pool. Price is higher and higher and higher. So, I mean, you can't, there's daily, look at the weekly. Like you can't deny this. Like it wants to pull higher. So that's your edge, man. Look, down here, higher. Direction's wanting to go up. So if we know that and we learn to control our interface, the type of account we're using, make sure you're properly aligned there. If your goal is just to accumulate wealth, and at the same time you're trying to learn trading skills, then what this process is what Michael figured out is by buying, basically targeting the ones that didn't do as well last year, those tend to do the best the following year. And that, reversion to the mean, that's at the heart of money flow. And you can look that up, what that means. But the pull, if we know that and we got an edge, let's see if it's still holding. Look at this. This has been up since 260. Now we're at 405, just up. So imagine this. Okay, over here. So look at these years. So around 2018, you could be like, look, man, this is crazy, dude. This has gone too far. Look, it just keeps going. You can do it over here. You can do it almost any time, man. You can go look and you can put it on here. And then as you begin to fractal that down, we'll say, no, we're not going to say, this is a monthly chart. And we start taking this down, you'll start seeing what makes up those bars. And if you ever sit and experience day trading where 1 minute bar, 1 minute bar, 1 minute bar, I mean, that can be a ride. And then you go to a 5 minute chart and all you got is one bar. That little ride you were just on, up or down, created that bar on that chart. And that's that fractal nature of time. Time, I mean, that's what it's all about. Time. What side of time are you on there? And so, we come over here. Here's a weekly. I mean, look, price is ripping up, right? Well, if I come over here to a daily, what's happening? Price is moving up, right? So every time it gets above that green line, it starts to pull it up. It'll run for a while and then what? Pause. So if I'm trading on the low end, take it all the way down to a 1 minute, I mean, what side of this pattern am I wanting to trade? I mean, for me, almost every time, it's right here. I want to be on this green side. That's the easiest side because that's the edge, because most of the time it's being pulled that way with periodic moments of the way down. So my way to play the downside was just not to be in it. And you can focus on that. And some people have a knack for it. I would just try to use it to my advantage, like to not have as much when it does that, but then, or not really care because I'm just looking to accumulate on these ones. And that's the trade, And so the trade begins defined by time, fractal nature. What we're doing, something as little as 1 minute or something as a position over years, like we showed with Uber. Let's see. Oh, it was on the monthly. Fractal nature, right? What we see, the general drift is to the upside. It's just being pulled by the index. But what's in the index, individual stocks can come and go. Pretty wild, huh? Now we got American Express on there. We got Merck. We got Chevron. Got Boeing, right? Some young dude gets a job there. So if you're 30, then when is this? I didn't see the year on this. What year are we at? 1991. Come on, man. I'm 20. Wow. I wish I'd have been playing then. Let's see. I'd be on a yacht right now, not doing this live. God, look at that. We can't even go that low back. And yet people blow out. And that's because of things they do. It's not because of the market. The market's here to give you money. Man, there's dividends every day. There's moves up. There's drafts. Roku's not as Uber didn't sneak up on you. You didn't miss Amazon because it was so sneaky. You just didn't look. All these things are around us, man. We just got to put our focus on it. But starting with these dogs of the Dow, one is going to do one thing, put you on the side of the winners, which is Dow Jones Industrial, side of America. And then as you start looking at these companies each week, if you go into the newsletter, if you look over here on page 5, I have where the condition I think they are as of me putting that up. This page 4, I update this not every day, but most days. If you're inside Discord with us, that's on my channel. I'll drop that in real time or text it to you. So this week, to bring this into real time, well, Chevron is in this dogs of the Dow. If I'm the kid, if I got 10 grand and I'm coming to the marketplace, I got to start allocating money here it is. We're at that time of year. It's stage 1 setup. There's Dogs of the Dow. It's been there for 53 years. This is not a secret. It's just a matter of, or do we have our attention on it? And I try to force people's attention to it every day, every week, constantly. Ever since I've been online, on social, every day of my life, I look at this concept called Dogs of the Dow because it wins. It works. You know, I buy 2-bedroom houses and rent them out because people rent them. It works. You don't need to fix it or change it or add anything. You just accumulate them. And this is one. Well, I have a bunch of this, but it opens up for trading, right? So that book I opened up with on the cover, you know, Chaos to Cash. Look, this is a blue chip dividend stock trading underneath the 200-day moving average on the Dogs of the Dow list in a stage 1 in oil. I mean, there can't be too many more. Here's your sign. So we're already on this, but that's already broke out for me. So now is where you can kind of use intelligence and start looking at the sector. And look, Exxon's lagging a little bit, but it's right there at support. If we go look, it's undervalued. Well, part of the reason is a bunch of value came out of the stock because they did a merger. So now look what happens. So you could just buy these and then go about doing dumb things. Or you could buy these and go about reading and looking and studying. And then you're like, oh, these guys trade in the XLE. And you realize the XLE is one of the sectors in the S&P 500. So in one fucking minute, look what all you learned right there. And so as you begin to layer that on, that was scratch that 11, 12, 13. As you begin to layer that on with knowledge, you don't have to think about that anymore. You think about that automatically and naturally. And so as you see oil set up, you already have 10 plays in your head, running through your head, right? USO, but we could 2X this. You could buy tonight when the market opens, I might sneakily buy oil futures contracts because we're in stage 1 right here, right? We got a tradable bottom. And oil, what? How did I learn about oil? Well, I was doing the Dogs of the Dow. Dogs of the Dow have several oil stocks in them, which then leads you to understanding about leverage funds that trade this, which then lead to like the actual commodity, which leads to, and there's multiple ways, right? And so as we begin to look and think about oil, all of a sudden, what? We got USOI. This pays a 22% dividend yield, and it tracks the price of oil. They sell revolving options contracts on oil. And if oil's about to break out and run, which it's what it's looking like to us, right? If we trade this pattern, probably going to be a whole lot of that going on. So it will move up with the price of oil, and it will generate income from the premiums it sells on the options. There's a lot of ways to play this, and you're not going to know all that overnight because you only got 10 grand. You're not supposed to know that. People with 10 grand don't tend to know these things because they tend to play video games or do other things. That's why they have 10 grand. So to elevate that, you would start with this, but then that would just be the jumping point where you would then begin to watch these cycles. And your goal is not amazing stock picking because you don't have any record of that. And there's no reason you should even be good at that. But this is already being played. This game here is already going. And so as we allocate into those 10 and we start collecting and we start laying this chart pattern over, that opens up doors and windows because Pfizer's opening up, right? And it's attached to them. And that takes you down a whole nother. Well, as you go forward 52 times doing your homework, looking at that, guess what happens? You know a shit ton. And what you think about comes about, and what you focus on grows, man. I'm going to wrap up church today. I want to do this last one. And I know a lot of you made some money. I hope you made some money this year. If you didn't, go learn from your lessons. Don't be a little about it. See what you did wrong and fix it. And let's get going, because crying about it ain't going to help nobody. Definitely ain't going to help you. You just got to fix what, look, we're about to get stopped out. And that's a whole class in risk management, right? As a trader. What does that mean as an investor? But get into this, man. That's what church is about. Spend some time with it. Realize we have the edge. It's a rigged game. It's on our side, man. It goes up. It always has.